Welcome to Geoscope, your front row seat to the world's shifting economies. This week, a feud is rattling one of the world's closest alliances. For decades, Canada and the United States shared seamless trade, booming tourism, and cultural bonds. Now, that trust is fracturing. Tariffs, fiery rhetoric, and consumer backlash are jamming the gears of North America's partnership. Canadian campaigns are surging, cross-border travel is tanking, and Ottawa is redrawing its entire export map. One cracks at the border. Tourism hits empty. For decades, cross-border travel was effortless. Canadians flocked to Florida beaches, Arizona golf courses, and New York malls, fueling billions in U.S. spending. But in 2025, the flow reversed. Trips by car from Canada plunged nearly 37%, and air travel collapsed 26% year-on-year. Behind the slump, tariffs, political tension, and even talk of Canada becoming America's 51st state. Canadians didn't just roll their eyes, they closed their wallets. Boycotts spread. Vacations turned local. For the first time, more Americans drove into Canada than Canadians headed south. Border economies are paying the price. Hotels, resorts, and restaurants once buzzing with Canadian visitors now sit half full. Tourism, once a symbol of unity, is sputtering under the weight of politics. And what's coming next makes that look mild. 2 tariffs in overdrive, a 35% blowout. If tourism is stalling, tariffs are the full-blown engine failure. On August 1st, President Trump raised duties on Canadian imports from 25% to 35%, citing national security. Ottawa called it political theater, especially since the justification linked to fentanyl, not trade. Then came the knockout punch, a 40% penalty on goods rerouted through third countries. The loopholes were gone. Add that to existing tariffs, 50% on steel and aluminum, 25% on autos and parts, and Canada's industries are exposed like never before. But it's a double-edged sword. American factories dependent on Canadian metals and parts now face inflated costs, driving up car prices, home builds, and appliances. Economists estimate U.S. families could pay $2,400 more a year for tariffs meant to punish Canada. The result? A self-inflicted wound. 3 shifting gears, Canada's great trade pivot. For over a century, Canada's economic engine ran south, with nearly 80% of exports going to the U.S., but 2025 forced a hard turn. As tariffs piled up, Ottawa began steering toward new markets. Between May 2024 and May 2025, U.S.-bound exports dropped from 78% to 68%, their lowest in decades. Meanwhile, gold exports to the UK exploded 473%, energy shipments to Singapore surged, and aluminum sales to Italy spiked. These aren't detours, they're new trade highways. Canada's trade deficit narrowed from $7.6 to $5.9 billion in just a month, thanks to booming resource exports. Economists warn the lift may be temporary, but the intent is clear. Dependence on Washington is now seen as a national risk. 4. Driving local. The rise of Buy Canadian trade isn't Canada's only response. At home, a quiet revolution is brewing. Buy Canadian campaigns have turned from slogans into a movement. 67% of Canadians now avoid U.S. goods despite higher prices, a patriotic push that's reshaping consumer habits. Manufacturers, meanwhile, are racing to qualify under USMCA rules to preserve U.S. access. Compliance rose from 50% to nearly 66% this year, and could hit 90% by December. Domestically, Ottawa is tearing down its own walls. Analysts say removing interprovincial trade barriers could add $200 billion to the economy, cushioning industries hit by U.S. tariffs. Energy remains Canada's trump card. Politics in the fast lane, the new reality politics, is now the battlefield. After U.S. negotiators missed the July 2025 trade review deadline, Prime Minister Mark Carney drew a hard line. Canada will not trade sovereignty for tariff relief. Public opinion is backing him. A February poll found 91% of Canadians favor reducing U.S. reliance. 2/3 view America less favorably, and nearly 70% are avoiding U.S. travel and products. Washington, meanwhile, is using what analysts call a floating rationale strategy, changing tariff justifications from fentanyl to dairy to keep Canada off balance. The true test arrives in 2026, when the USMCA sunset review could collapse the entire framework. But this time Canada isn't waiting to react. It's diversifying, retaliating, and uniting around one message: resilience. Verdict: from dependence to determination. Canada's 2025 journey has been rough. Tourism stalled, trade rerouted, costs climbed. But through the chaos, something powerful is emerging. Self-reliance. Industries are adapting. Compliance is rising. Consumers are choosing national strength over convenience. Even policymakers are dismantling internal barriers once thought untouchable. The US may still loom large, but Canada is no longer in its slipstream. It's charting a new course toward independence and economic balance. Now, the big question: can Canada's domestic revival truly replace the US market? And when will Washington realize its tariffs are backfiring? Drop your thoughts in the comments, and don't forget to subscribe to Geoscope. Yonofren Nobri, Tantu Bapanin Nobin, Yobin Dobrin, Keatin Keems, Der Nobrin Novrin Noben Novrin, Thin Prebrin Gentran Dobrin. Choprin Noben, Jalberlens, Din Stenri Da, on a world in motion.